listener production.
Hi, Natarsha Belling with you and welcome to the afternoon edition of The Briefing. Coming up in our deep dive, the RBA has kept the official cash rate on hold this afternoon at 3.6%. But experts are warning there are concerning signs ahead for the Australian economy, with latest inflation figures higher than expected and consumer confidence plummeting. We'll unpack all the details and find out exactly what may happen next with a top financial expert. But first, let's check the afternoon headlines this Tuesday, the 4th of November. History has been made at the Melbourne Cup this afternoon, with Jamie Milham becoming the first woman to win both the Caulfield and Melbourne Cups. On Half Yours, the 29-year-old stormed to the finish. She's also made history with her husband Ben, as they're the first married couple to both compete in the Melbourne Cup. Goody Two Shoes finished second and Middle Earth ran third. 13 people have been arrested after police and demonstrators clashed at a Pro Palestine protest outside a weapons expo in Sydney's CBD. The protesters chanting war criminals.
War criminals! War criminals! War criminals! War criminals!
The Indo-Pacific International Maritime Exposition, which is New South Wales government-sponsored, features a range of maritime and naval organisations, including Israeli defence contractors. The Palestinian Action Group originally planned to blockade the expo, but a police operation involving mounted police and the riot squad prevented them from doing so. Group organiser Joshua Lees has lashed out at New South Wales Police.
We're having a peaceful protest here, and we've suffered attacks by police. They were pepper spraying people, riding police horses into people, arresting people. They sprayed me right in my eye as I was just trying to help someone else up. It's outrageous.
And New York's Republican mayoral candidate Curtis Sliwa has taken a bizarre swing at Sydney's Parramatta, calling it gang-infested. He was being interviewed by a WA blog called The Last Place on Earth and says when he visited the city more than 30 years ago, he wasn't a fan.
I was in Sydney and I was invited to set up Guardian Angels in Parramatta.
Right.
Took me an hour to get all the way out to the suburbs. I go, how bad could it possibly be? And then when I walked around, I said, whoa, they got gangs here.
Curtis also admitted he hates Vegemite with a passion. Parramatta's Lord Mayor says the city has completely transformed and even invited Curtis back to see it for himself. Meantime, the United States' biggest city will vote for its next mayor on Tuesday local time. Curtis is tipped to finish last in New York's mayoral race. Now it's time to get into our deep dive on this afternoon's RBA's decision to keep rates on hold. A key factor in not pushing through another cut in rates was higher than expected inflation data. The Federal Treasurer Jim Chalmers admitting with the cost of living crisis still biting, many Australians are doing it tough.
I acknowledge and we acknowledge that even with this progress we've made, Australians are still under pressure. Those 3 interest rate cuts are providing a bit of relief. But we know that many Australians would have preferred to see more relief delivered today.
So did the RBA make the right call? And what's the forecast ahead for rates, jobs and skyrocketing costs? Financial expert with Canstar, Sally Tindall, joins us with her analysis. Sally, thanks so much for joining us. First question, were you surprised today? Everyone had been predicting the RBA may keep rates on hold, and it looks like they have delivered on that expectation.
A unanimous decision as well. Totally not surprised at that. It was interesting to see that they didn't even entertain the possibility of a cash rate cut at this meeting. Certainly they didn't entertain the possibility of a hike either, which is good news.
In regards to, we always find the devil's in the detail with Michelle Bullock, the RBA governor's speech after the announcement. Some interesting comments she made. Yet again, key focus was they are keeping a very close eye on Australia's unemployment rate. What does that say to you, Sally?
Oh, absolutely. It jumped up to 4.5%, and I think it's got everyone a little bit on edge. It certainly doesn't have the RBA rattled, but they are focused on making sure that they can keep Australians in jobs, because I think a lot of people don't realise that the RBA has 2 mandates, 2 primary mandates. One is to keep prices in check. The other one is to keep Australians in jobs. And they are now competing priorities because the rise in unemployment rate, if the RBA was concerned, what they would naturally do was cut the cash rate to stimulate the economy and help generate jobs. But then we've got inflation proving to be problematic, proving to be stickier than we thought. They would naturally then hike the cash rate to bring down inflation. So at the moment, they're really at a difficult point where they're two competing priorities require different reactions from that one lever that they have. They only really have one primary lever, which is the cash rate. And so you can see that in the statement today. Certainly the last line, it says the board is focused on its mandate to deliver price stability and full employment and will do what it considers necessary to achieve that outcome. Now, previously, before May, they didn't refer to unemployment, or employment rather, in that last line. That's been there since May. That really articulates the fact that it's very much front of mind for the RBA.
Sally, let's go into details about that inflation data. That seems it was a key factor for the RBA holding rates, the cash rate, keeping them on hold. They were higher than expected inflation rates for the September quarter. Now, Michelle Bullock said there were a number of reasons she believes why we saw that unexpected increase in inflation, including price increases. And interesting to note, she mentioned new dwellings. So what does that say to you?
Yeah, so for a while there, the cost to construct a new dwelling was actually quite low, and that's picked up in recent months. But there's also a lot more in that housing basket. Things like property rate rises, I think they referred to it as, which is really just council rates going up. And I know a lot of people have felt the full force of their council rates going up recently. That's really hit home on a lot of budgets recently. But also then you've got electricity. And I know we've talked a lot about electricity and the impact that that has, and the fact that the rebates have really made it go up and down like a roller coaster. But underpinning that, when you take out all the rebates, what essentially we have are price rises for electricity that happened in July, August and September of this year that were approved by the regulator. Those default market offerings went up. And so, market offerings, market prices went up on the back of it as well. And that's the really big concern from where I sit, is that electricity is one of the biggest bills households pay. The government rebate is drying up. In fact, most people probably already have had that last $75 instalment in their electricity account right now. Once we go back to paying full freight, it's going to be bill shock for some customers in the peak of summer when they want to turn their air conditioning on, if they're not smart about how much they're paying for their electricity and working about ways to minimise those bills.
So, Sally, yet again, Michelle Bullock quoted a number of times in her speech this afternoon that the RBA was cautious, because she was asked very bluntly, would the RBA be increasing rates, keeping them on hold, or decreasing them? And she certainly didn't give an answer saying that anything is possible.
Yeah, and anything is possible because the RBA has made it very clear for a number of months now that they are data dependent and the data is jumping around. So we're just not sure what the future of the cash rate looks like, but she did say it's possible that there may be no more rate cuts. And I do think if anyone's got a mortgage, they really need to listen to those words. There may not be any more RBA rate cuts. If you need rate relief in your mortgage, it's up to the borrower, the individual borrower now, to go out there and get it for themselves. And, hopefully you can, because what we're seeing on the data side from the mortgage rate side is that, yes, the RBA might be on hold, but lenders are not. They are cutting new customer rates. We've seen, 15 lenders in the last 5 weeks cut at least one variable rate for new customers, not existing loyal ones, new customers. And so you really need to think about, if you need rate relief, turning yourself into a shiny new customer by refinancing, or at least turning yourself into a squeaky customer by picking up the phone and haggling. And when I talk about those 15 lenders that have cut at least one variable rate, I'm talking about banks like Westpac. It's Australia's second biggest lender. CBA's offshoot Unloan also cutting rates. It really shows you just how much competition is in the market. And if this helps listeners, you're an owner-occupier, the average variable rate right now is 5.53%. So take a second to think, okay, 5.53% for a variable rate as an owner-occupier, what am I paying? Am I above or below that? And hopefully you're already below that. But there are 42 different lenders on the KSR database, I think it is now, that are offering at least one variable rate under 5.25%. That's the kind of stretch target you want to be aiming for.
Sally, many people can't afford to get into the housing market and don't have a mortgage and they're paying skyrocketing rent. But still, there are really key takeaways from the RBA meeting today about jobs and also the future of the housing market.
Oh, absolutely. I do think we need to keep a close eye on that jobs data and make sure that I can remember a time just recently, a few years back, that 4.5% unemployment was actually a good thing, not a bad thing. I remember when we went under 4 and it was this huge moment, right? Now we've really understood the importance of keeping what we always have, but the importance of keeping the gains that we've seen in the labour market and really trying to protect them. And 4.5%, I think for a lot of people is high enough, right? Because the most difficult thing to do with a mortgage is not high interest rates, but paying a mortgage when you don't have a job. And there's a lot of people that want a mortgage but find it impossible to save for that. And I think the other big really pressure point here in our economy and for our society, perhaps thinking bigger, is skyrocketing property prices. It really does feel like it's escalating a little bit out of our control at this point in time. We've seen data from Westpac, data from CBA saying that new loan approvals, particularly for younger buyers, is really starting to pick up pace because of the government's first home guarantee scheme and the expansion of that. I do worry that, for people looking to save for a mortgage, that this goal is getting further and further out of their grasp. The good thing is that savings rates will hopefully stay on hold because the cash rate stayed on hold, but there's no guarantee to that either.
We'll watch with great interest, Sally. We appreciate you, as always, for joining us with your great analysis. Thank you.
Thanks, Natarsha.
That was financial expert with Canstar, Sally Tindall. And that's it for this episode of the afternoon edition of The Briefing. We'd love you to subscribe or follow us on Instagram at The Briefing Podcast. I'm Natarsha Belling. Thanks for your company.